Mortgage interest rates have come down by 1%, in some cases by 1.75% for first-time buyers, and these rates are available to you right now. In today's video, I'm going to share with you what lenders are doing to bring these rates down to save you thousands on your interest in this ever-changing market. And in the end of this video, I'm going to share with you a real-time scenario that will show you and tell you what your rate will be if you were to buy a home right now in this market. So let's get started. What is really happening here? Well, the governing body known as Federal Housing Finance Agency, which monitors and governs GSEs like Fannie Mae and Freddie Mac that buy mortgages from conventional mortgage lenders, they use something that is called loan level pricing adjustment. It's a chart. Let's look at the chart on the board real quick. It looks like that. Don't worry too much about the chart, but what this chart is looking at what credit score you have and what down payment you're putting, which stands for the LTV, and it gives you a pricing based on these two numbers. So as you saw on that chart, that when they're looking at your credit and they're looking at how much down you're putting, they give you a percentage that is charged to your rate. It's kind of like an add-on, kind of works like discount points. It's not assessed in dollar value, but say the feds have raised their rates at a certain threshold, the lender has to use that rate, then these add-ons get added onto that rate and then gives you your final rate. So what this entity has done is they have adjusted their LLPA, also known as risk-based pricing, that chart that I just showed you, to be more competitive and give you more competitive pricing in today's market where rates have gone high and home affordability has gone out of reach for some people out there. Now, let's figure out how you can qualify, okay? So for these programs, it's like I mentioned earlier, this is for first-time buyers only. That's number one. And number two, there is a max income limit. So if you're at a certain income, you may not qualify. I'm going to go over that in a second, how you can qualify. And these programs are called, there's two programs, Home Ready and Home Possible. These are the programs that are available that are giving you these competitive pricing. So let's use this tool to see how you can qualify. So you will click on this link, which will be in the description of this video, and you will go and click OK on the disclaimer, and you would search for whatever city you want to search for by typing it in. Then you will hit that city, and the city in this tool will give you the area median income, the 80% income, the 100% income, and the 50% media area income of the city that you are interested in to buy a home. So you looked at that tool on the screen, and in this video, since real estate's localized and I promised you guys I'm going to give you a real-time scenario, we're going to look at the city of Fremont. So if you use this tool, whatever city you're in, just punch in your city and it'll give you the different median incomes in that city. So let's look at the city of Fremont. So I put in Fremont in there, the Fremont median income, the 100% income is 151,000, the 80% is 120, and the 120% is 181. So the Home Ready and Home Possible programs prior to this adjustment that I talked about initially in this video, that's been done by the Federal Housing Finance Agency, before they would only consider 80% of the median income. So people that were living in Fremont, that's a high cost area. If we're only considering 120, now you really don't qualify for a home for 120 in Fremont. So in those areas, these programs were not working. So now we like I mentioned in the beginning of the video, that the chart has been adjusted, but also what's been adjusted is the max income qualification. So now in the city of Fremont, you're going to qualify with the 120% area median income instead of the 80%. So now that number goes to 181,320, qualifying a lot more people in this program. So this chart right here may be different for you depending on where you live. Click on the description below in this video and use that tool to figure out what your 120% income is in the area that you live in. Thank you again for stopping by and having confidence in my content. If you're getting real value out of this video, please hit that subscribe button, comment below, and hit that like button to tell me how I'm doing, because I love to hear from you. Thank you for watching. I love you all. So as promised, now let's look at a real-time scenario in the city of Hayward, which is based in Alameda County here in the East Bay area of Northern California. So let's suppose that we're buying a single family home in the city of Hayward, and the purchase price is $1.1 million, which will buy you a pretty decent 4-bedroom home in this city right now. And we are going to put only 5% down, which is $55,000. The loan amount is going to be $1,045,000. Then we're assuming that your credit score is 740. Based on that scenario, a 30-year fixed rate under these programs will be 5.621% with a mortgage insurance of $243.54. Yes, there's going to be mortgage insurance because you're putting minimum down, but if you have a credit score of 780 or plus, your mortgage insurance will adjust to only $165.46. So you just saw there that you're getting almost a 5.5% interest rate, whereas the average rates were sitting at 7.25% just 2 weeks ago. So this is a huge change in the market with these programs, and these programs will put a lot of people in homes moving forward. We did see huge application decline all across the board and with all across different lenders, where applications were down 50%. With these changes, and as people start to adjust to the new market and these new rates, and these may be the new nominal rates that we have going forward for people to buy next year. And this will cause people to start adjusting to the new market. We will start to see more applications coming for purchase loans. And these programs are available for you starting December 1st. Today is December 2nd when I'm shooting this. So you can go check out these programs as I speak right now, and because they are available for you to utilize. Now, as I mentioned in my last video, lots of different things are happening in the market, but we know that homes are still turning, maybe not at the rate of 8 or 10 days on market, closer to more 30 to 28 days, but homes are still turning. So if you are interested to buy a home and if the numbers work for you, talk to your loan officer today. And if you're buying a home in Texas, California, or the state of Washington, you can contact myself and my team, and we would love to help you and help you go through this process together. Just click on the link in the description below, the calendar link, and set an appointment today. Thank you for watching. Until next time, this is Karan Singh.